Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. Welcome. We had the FOMC meeting. Fed went up 25 basis points. We will be playing that for you. I'm going to be playing some commentary to see what this market is trying to tell us. I am going to go right into closing bell, and then we will be back for that data. So stick around. Make sure you don't fall for any spam. I don't have a WhatsApp, Telegram, none of that. I will never DM you and ask you how your trading is going. Okay. So let's just listen to a little bit of commentary right into close.
About the midway point of this range we've been in since October. We were at 3,800 and change at a Monday low of last week after the Silicon Valley Bank buckling. And not only that, we were at 3,992 the day before that happened. So essentially very much range bound, but giving back any bullish interpretation of what happened at the beginning of that press conference. And that is now also below where the two-year note yield was in October of last year when the stock market bottom, also well below the 5% peak. That is going to do it for the closing bell on this day. We're going to send it over to overtime.
What a sell-off in the last 35 minutes, going out right at the lows. That is a scorecard on Fed Day, but winners stay late.
So Fed Powell did not rule out going negative or neutral, should I say, on the next. He left the table open for that, but he also left the table open for another 25 basis points. So he pretty much said 50-50 either way. 50-50 going another 25 basis points, 50-50 going to neutral. So he just kind of left it there. The market did not really like that. And there's a lot of comments he made that stood out. I'm just going to show them to you in a different way because they're all posted here where you could see them. As you can see, Dow shares more than 500 points. It just did a steep dip off, right? So let's look at some of the things that he said, right? I do still think there's a pathway to a soft landing, said the Fed chair, right? You and I know there will be no soft landing. That is a bunch of crap, all right? We don't see ourselves running into a reserve shortage. It's another thing he talked about. Supervision and regulation is needed to keep up with what's happening, said Chair Powell. He was talking about the banks and deposits and the laws regulating the banks. And so he's saying that supervision is still needed in the banking industry. Deposits should assume their deposits as safe. They're again going to the banking again. So if you deposit more than $250,000, you should be guaranteed that it is safe. You should be able to withdraw your money at some point. You do know that all of your money is not sitting in the banks. So if you go, if you have $30,000 in the bank, you're not going at the flip of a switch and go and pick it up. They'll give you some cash the first day, and then it's going to take you a while to get it all out because it's not sitting in the bank. I also have a video for you guys that I want to play some commentary on the Fed, and we'll discuss after.
I think is when you're getting the most dovish comments and the best of that knee-jerk higher. And then from there, you watch the two-year yield essentially crash back down to 4%. Not the biggest move we've seen the last week or so, but a decent-sized move. And I think that tells you everything you need to know. The dollar has now been smashed down. And I think the market is basically saying, okay, we'll take this rate hike, and you will take it back from us soon enough. And that's where I think we kind of land right now. Still got another 45 minutes left into the close. Most of the commentary I've been reading is saying non-event, one minor change in the statement. They added something about resilience to the banks. But really, there wasn't that much here that changes over.
And it was clear there's only so much and so far that he would go in terms of being specific about the banking crisis. He did say deposit outflows had stabilized in the last week or so. That might have been a little bit of news in a small way. And so it seems as if we're left with, okay, this is sort of part of the plan, an extension of what the Fed's been doing and what they've said they are going to continue to do. right? Which is, look, we still think we're way above our target on inflation. We have more to go, probably. They do have the summary of economic projections that was updated in March. And essentially, they're saying, well, GDP might be a little weaker than we thought it was going to be in December. But then again, the economy's been running much hotter than they anticipated.
6 months into the 6 minutes into his remarks, when you first started to turn lower, quote, process of getting inflation back down has a long way to go. It will be bumpy.
Exactly.
Market didn't like that. They also didn't like, quote, that's not our baseline expectation when asked about the potential for rate cuts.
Exactly.
Gold is clearly benefiting from just this idea that inflation is still elevated, and now we've got an added set of hurdles in the financial system in the form of instability, and gold likes both of those things, and I'm not surprised to see this as the best asset class on the day, even more so than short-term bonds.
True, although it did poke above 2,000 earlier this week, right? So we're still seeing if we can... If we can get there.
Look, there was only one question going in, how he was going to handle the tension between inflation still being high, still being in need for the Fed to address it, and the issue of what's happened in the banking system over the last 2 weeks. And I think he probably got out of it handling it reasonably well. And I think maybe you can hear how he responded. It's preserving flexibility in his policy, not committing to a policy down the road as a result, in his answer to my question here.
These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path will might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know.
Okay, so how well did he do? Let's look at the probabilities for May, which are 50-50 for a quarter-point hike. And then pretty much after that, they're 50-50 for another quarter-point hike through June. So he really was able, I think, to steer it in the middle here, preserve that flexibility. He deflected the question about what went wrong and the Fed's culpability to that to the Barr investigation that's going on, or the Barr inquiry that's going on, and will come out May 1st. And he suggested that the banking system remains relatively sound. So, look, you can't say in the next couple of days there won't be another banking issue or banking problem. But if things remain status quo, I think the Fed chair kind of navigated this very tricky obstacle course that events have created here.
So there you have a blow by blow. They said it as well as I would say it. If you missed something, just rewind it of how it actually went down, how the market reacted in real time. Of course, there was a massive sellout. There was a massive sell-off at the close, at the end. Literally the last 1 minute, the market just fell off of a deeper cliff, all right? So the market did not like what it heard today. It was just, some people would say, yeah, it was a non-event, but it really was. Now, of course, we know how this goes. It's Wednesday. We have to see what Thursday and Friday of the market tells us. There's a lot of moving parts. It's going to be harder to get credit. The Fed thinks that is positive for inflation, but it's bad for business. I think that we are already in what's called a rolling recession, meaning there's recessions in different pockets of different areas. And there's a committee that actually calls out that makes the initial announcement of it being a recession, and it's not Fed Jerome Powell. When that committee says that we're in a recession, I'm almost guaranteed that they will go back to 2022. I think we started in January of 2022, and even though GDP went back up, we're not out of a recession. He also stated that he sees a slowing GDP, gross domestic product. So we are in a recession. Yes, housing is still not into recession mode yet. All right. We just had some positive numbers in the housing market, and people still have jobs. But there's other sectors that are already in a recession. OK, so because I was not able to go live this morning, I will be going live tomorrow morning, which is Thursday morning, so we could see what the pre-market is telling us. And I will lead you into opening bell, and then we'll be back again at our regular time, Thursday, just right at closing bell. All right, good people? Hey, thank you. It's a lot. Just like myself, just like the market, we have to digest all of this information, and I'm going to do my absolute best to keep you guys well informed. All right, make sure you check out all the links below. We'll see you tomorrow morning. Make sure that notification bell is checked. Live, love, laugh, learn, earn.